So we are now looking into the revision of this week. So sorry for uploading it late. So this week we have 3 chapters, that is time of supply, composition scheme and value of supply. So look into time of supply segment 6. So in this time of supply chapter we have total 4 sections. Section 31 which deals with due date of invoice, section 12 which deals with time of supply in case of goods, section 13 time of supply in case of services, section 14 time of supply in case of change in rate of tax. First, section 31 which talks about due date of invoice. We have total 6 provisions. For goods we have 3 provisions, for services 3 provisions are there. So goods we have normal cases, continuous supply of goods, sale on approval or on return basis. Normal cases is balancing figure. First you need to check whether it is continuous supply or sale on approval or not. If it is continuous supply of goods, which means there will be successive supply of goods for which the payments are settled on a periodical basis, then it is continuous supply of goods. Sale on approval or a return basis means, so we will be delivering the goods now, but the sale will happen only if the customer accepts. So then it is sale on approval or on return basis. If it is normal cases, we need to check whether supply involves movement of goods or supply does not involve movement of goods. If supply involves movement of goods at the time of removal, if supply does not involve movement of goods at the time of delivery, that will be taken as the due date of invoice. Whereas in case of continuous supply of goods, so we need to see whether the payments are received based on account statement or irrespective of account statement. If the payment is based on account statement, the account statement date. If the payment is irrespective of account statement, the payment received date. So the payment received date or account statement date, as the case may be, will be taken as due date of invoice. In case of sale on approval or on return basis, 6 months from the date of removal. If the recipient accepts, then that date. So therefore 6 months from the date of removal or date of acceptance by recipient, whichever is earlier. Within 6 months, if the recipient is not accepting, on expiry of 6 months it is deemed that the recipient will accept, so we will raise the invoice. Thereafter if he returns, we need to issue a credit note. Then services. For services we have 3 provisions. Normal cases, continuous supply of service, cessation of service. So cessation of service means abruptly stopping the service. Continuous supply of service means a service which takes more than 3 months to complete and involves periodic payment obligations. Both the conditions should be satisfied. It should take more than 3 months and it should also involve periodic payment obligations. In case of continuous supply of services, we need to check whether due date of installment is ascertainable from the contract. If yes, the due date of installment will be taken as the due date of invoice. If not, then we need to see whether the payment is linked to completion of event. Then the date on which the event is completed, that will be taken as the due date of invoice. Suppose if in the absence of these 2 cases, then as and when the payment is received, that will be taken as the due date of invoice. Then cessation of service, immediately upon cessation the invoice needs to be given. For normal cases, banking and insurance services 45 days from the date of completion, other cases within 30 days from the date of completion. So here subsection 147 is for goods, normal cases, continuous supply of goods, sale on approval, whereas 256 is for services, normal cases, continuous supply of service and cessation of service. Subsection 3 is related to tax invoice, general provisions, so that we will be learning in tax invoice, debit notes and credit notes. Then what is the time of supply in case of goods and services? Section 12 deals with goods, section 13 deals with services. Both subsection 1 deals the same. The liability to pay GST is determined based on time of supply. The objective of time of supply is 3. Number 1, to determine the due date of payment of GST. Number 2, to determine the rate of GST. Number 3, to determine the exchange rate. So therefore the liability to pay GST depends upon the time of supply. 12 subsection 2 and 13 subsection 2 deals with time of supply in case of FCM. In case of goods 12 subsection 2, services 13 subsection 2. So goods we have to learn 2 points. Number 1, composition scheme and specified actionable claims. We need to take 3 dates: due date of invoice, actual date of invoice or date of payment, whichever is earlier. For others it will be only 2 dates: due date of invoice or actual date of invoice, whichever is earlier. Whereas for services under FCM we need to check whether invoice is given within the due date. If given within the due date, then invoice date or payment date, whichever is earlier. If not given within the due date, completion date or payment date, whichever is earlier, will be taken. Which means whether GST payable on advances in case of goods under FCM. In case of composition scheme and specified actionable claims, yes, GST payable on advances. For others, GST not payable on advances. But in case of services, GST payable on advances, because date of payment is one of the date here. Then time of supply in case of RCM is 12 subsection 3 and 13 subsection 3. So we need to know what are the cases where it is RCM. So accordingly we need to determine the time of supply. So in case of RCM, we need to see date on which goods are received, date on which payment is made to supplier, or 31st day from the date of invoice, whichever is earlier. Whereas for services, we don't have the date of receipt of services, it is the date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. As date of payment is one of the date here, so which means GST is payable on advances, both in case of goods RCM as well as service RCM. Then 12 subsection 4, 13 subsection 4, both the cases the provision is same, that is vouchers. If it is identifiable voucher at the time of issuance of voucher, non-identifiable voucher at the time of redemption of voucher. Identifiable means that voucher can be redeemed against a particular product or particular service. Non-identifiable means it can be redeemed against any product or any service of the supplier. For identifiable, the date on which the voucher is issued to be taken. Suppose if the voucher is not at all redeemed, on the basis of issuance of voucher already they would have paid GST. When the voucher is not redeemed, so then unnecessarily they have paid GST, so they will get the refund with respect to that. Whereas in case of redeemable voucher, that is identifiable voucher, okay, non-identifiable voucher on the date of redemption of voucher. On the date of redemption of voucher means today we will not pay GST, whenever they are actually coming and redeeming, at that point of time only we will be paying GST, that is this. Then subsection 5 is residual cases, but before applying subsection 5, we have other proviso that needs to be checked. So in case of goods RCM, services FCM or RCM, if the time of supply cannot be determined as per the provisions, then we need to see time of supply as the date of entry in the books of the recipient. If that is also not available, entry in the books of recipient also not available, then we will come to residual cases 12.5 and 13.5, which says if the periodical return is required to be filed, the due date of filing that return. If the periodical return is not required to be filed, the date of payment of tax. A registered person is required to file return, so due date of filing return. An unregistered person is not required to file return, but he may have a tax liability, the date on which he makes the payment of tax, that should be taken. Whereas subsection 6, 12 subsection 6 and 13 subsection 6 deals with time of supply in case of interest, late fee or penalty for delay in receipt of consideration. So it is always on actual receipt basis. Whenever it is actually received, we need to pay GST, and that should be included in the value also. So as and when such additional consideration is received, GST payable on receipt basis. Then next one, here what should be taken as the date of payment? From supplier point of view, date of entry in the books or date of credit in the bank account of the supplier, whichever is earlier. From recipient point of view, date of entry in the books or date of debit in the bank account of the recipient, whichever is earlier, should be taken. So GST payable on advances in case of goods, other than composition scheme or specified actionable claim, GST not payable on advances. So then with respect to services, GST payable because the due date of invoice or actual date of invoice, whichever is earlier. So due to that reason, you need to remember for goods only one point, that is other than specified actionable claims and composition scheme, GST not payable on advances. But for specified actionable claims and composition scheme, GST payable on advances. For services, always GST payable on advances. Then there is one point, that is up to 1000 rupees received in excess beyond the invoice. If the invoice is for 12,200 but the actual amount received is 13,000, there is some excess amount received. For that excess amount, we have to pay GST based on advance. But the problem is that we don't have to pay GST now. We can pay GST at a later point of time. There is an option available to the supplier. But this option is available only if the excess amount is up to 1000. Option 1, they can pay as per the regular provisions. That is the invoice which is going to be issued in future for that 800 rupees, or the payment received in this month, whichever is earlier this month. Or they can take only date of invoice itself as a time of supply, that is the date on which they are going to give invoice for that excess amount. So this is at the discretion of the supplier. Supplier has option to choose to whom this up to 1000 rupees point will be applicable. This up to 1000 rupees point is applicable to goods under composition scheme and specified actionable claim, and even for services. Then in case of services between associated enterprises, so under section 92A, where the supplier is located outside India, recipient is located in India, it's an import of service covered under RCM. Generally the date on which payment is made or 61st day from the date of invoice, whichever is earlier. But in case of associated enterprises, import of services, the date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier, should be taken. So this is in case of import of services by associated enterprises. Then generally when goods are taken outside India for exhibition, it is not a supply because the goods are not permanently transferred. However, if the goods are not returned from the exhibition within 6 months, then the deeming fiction will come under section 31 subsection 7 and it is deemed to be supply on expiry of 6 months. Then time of supply in case of change in rate, that is section 14. But this section 14 is applicable for services. In case of goods, only for two people GST payable on advances, that is composition scheme and specified actionable claim. For them only section 14 is applicable. So section 14 is applicable for composition scheme, specified actionable claims, and in case of services. First we need to see whether completion is before change in rate. If the completion is before change in rate, then we need to take invoice date or payment date, whichever is earlier. Simple, one point only. If the completion is before change in rate, invoice date or payment date, whichever is earlier, will be the time of supply. If the completion is after change in rate, if the date of completion is after change in rate, check whether both invoice and payment before change in rate. Yes, then whichever is earlier, invoice or payment. Suppose if one is before, one is after, then it will be whichever is later. Then here what should be taken as the date of payment? Suppose if the payment is credited within 4 working days from the change in rate, then the date of entry or date of credit in the bank account, whichever is earlier. If the payment is not credited within 4 working days from the change in rate, then in that case only the date on which it is credited in the bank account should be taken as the date of payment. Then circulars on time of supply. What is the time of supply in case of construction of HAM projects, hybrid annuity model projects, to NHAI? Basically in hybrid annuity model project, what will happen? So we will be doing the construction and we will also do the maintenance, and we will be recovering money from the government in annuities. So that is the best case of continuous supply of services, because a service which takes more than 3 months to complete and involves periodic payment obligation. HAM contract is a single contract where the supplier is responsible for both construction of its highway and its operation and maintenance over a period. So it is a continuous supply of service, and the due date is determined as per section 31 subsection 5. Usually what will be taken as the due date of invoice? So due date of invoice will be due date of installment will be taken as the due date of invoice, because in the contract clearly they will specify what is the date on which like they need to make the payment. So usually that will be taken, but it does not mean only that should only be taken. Suppose if there is any milestone event that is given, so that milestone events also can be taken as the date of invoice, because if the payment is linked to completion of event, then the date of completion of event will be taken as the due date of invoice. If the payment is not linked to event but the payment due date is given, then the payment due date will be taken. So therefore first priority, if the due date of invoice is ascertainable from the contract, that is due date of installment is ascertainable from the contract, we go by the due date of installment. Suppose if due date of installment is not ascertainable, then we will be taking whether payment is linked to completion of event, then the date of completion of event will be taken. But in one question when we did, we did by taking date of completion, because under the assumption that date of completion is taken as the due date of invoice, but alternatively the due date of invoice can be taken as the due date of installment also. Got it? So that's what it is given in ICAI study material. So first priority you take due date of installment ascertainable, the due date of installment as the due date of invoice. If that is not available only, then you take date of completion of the event as the due date of invoice. Then next, and time of supply will be as per 13(2) if invoice is given within the due date, invoice date or payment date whichever is earlier. If invoice not given within the due date, completion date or payment date whichever is earlier. In every installment there will be interest component also. That interest will be included in value as per 15(2)(d). So installment payable by NHAI include interest component which is part of value. So means for this interest also we determine the time of supply as per 13(2) only, even though for interest on late fee etc. and all we determine as per subsection 6, but this interest is actually included in the value as it is to be included in the value in installments. So therefore we take only one time of supply, that is 13 subsection 2 itself. That is in case of HAM contracts. Then what is the time of supply in case of spectrum allocation services by government to telecom operators? The time of supply here depends upon what option is exercised by the telecom operator. There are two options available to telecom operator. One is an upfront payment, another is deferred payment in installments. If it is upfront payment, then the due date of invoice under section 31 subsection 5, the tax invoice should be issued by the telecom operator on or before the due date of payment. That is upfront payment, they will tell by which date we need to pay. So that is the due date. By that date the invoice needs to be issued, and therefore GST liability arises when the payment is made or the payment is due, whichever is earlier. So whenever, for example, due date is 5th but we paid on 4th, So 4th or 5th, whichever is earlier, 4th. If the due date is 5th, we paid on 6th. So 5th or 6th, whichever is earlier will be 5th, that should be taken. In case of deferred installments also same logic, that for installments they will be giving a assignment letter. In that assignment letter they will specify by which date what installment is payable, that is a due date of installment. Now we need to see whether we are paying by that time or not. If you are paying by that time, that date or paid date whichever is earlier. So therefore GST liability arises as and when the installments are due or paid, whichever is earlier. So both the cases it is same, as and when the due date arises or the payment date arises, whichever is earlier should be taken. First case it is upfront payment, second case it is installment. Installment means for every installment we need to determine the time of supply separately. Frequency assignment letter issued by Department of Telecommunication cannot be considered as tax invoice. That is just the details, like installment due date, which date is there mentioned, but tax invoice separately they need to give in that case for each and every installment. Then that is about this time of supply provisions.